Welcome to the Get Wealth Podcast. My name is Brennan Wiersma. Please be sure to like and subscribe if you haven't already. Today I have here Marko Zlatic, or Whiteboard Finance, as you might know him as well. He's a real estate investor, stock market investor, personal finance expert, entrepreneur, and YouTube. You've grown quite the audience on YouTube, and that's how I have been able to learn from you and get in touch with you was I reached out to you on Instagram, but I subscribe to the YouTube channel. So excited to have you here today, man. How you doing?
Yeah, it's my pleasure, man. Thank you for having me. I'm doing well. How are you?
I'm doing pretty good. Yeah, ready to learn some finance and see if you can make me a millionaire in the next day or two.
Well, if I do, I got to take 3% at
Like,
least.
that's a deal. So, how did you start your journey to becoming, financially literate, or if an expert really, from what it seems now? You've had a background in finance even before, your YouTube and everything like that. Kind of explain how you got started, I guess.
Yeah, so good question. So basically, I grew up as a regular kid in Cleveland, Ohio. Still live here. Love, the value that you have in the city. But the way I got started was, I think, actually through entrepreneurship, to be honest. I was always someone that like wanted to create things or find like some arbitrage, meaning like, buy low, sell high. That started with Pokemon cards when I was like 11 or 12. And now fast forward 20 years later, I'm 32, 33, and I feel like everyone's investing in Pokemon cards. I think that's kind of funny.
Yeah.
It's kind of like fashion. Fashion comes back every 20 years or so.
Yeah.
So it started with that. It started with like mixtape CDs. I used to like burn mixtape CDs, sell them at lunch, and I think that just evolved naturally into like the stock market. I started looking at what really wealthy people invest in, and they don't sell Pokemon cards. They don't burn mixtape CDs. They usually invest in stocks. They usually invest in real estate. So I started my first brokerage account. It was with Trade King. That was before your guys' time. This was actually, I think they got acquired by Ally, if I remember correctly, but this was 15 years ago now. So I just turned 33. That was when I was 18. So I started investing in stocks when I was 18. And then the natural progression was to study finance in college. So I have a finance degree, a bachelor's in finance from the University of Akron. And then basically that evolved into working in finance. I worked in commercial real estate for many years. I worked on the lending side. I worked on the development side. Worked with all the big boys, with multi-million dollar deals, either on the lending side or the actual ground up construction or the sales or the acquisition of these properties. So I learned a lot there. Worked with a lot of REITs, worked with a lot of CMBS companies, commercial mortgage backed security companies. Worked up with Wall Street, worked you know uh, at a publicly traded bank. I mean, my, I actually have experience in finance, which is great. But, right around 2017 is when I started the channel because I never scratched an itch of wanting to become a personal financial advisor. I like to teach people and I like to help people. So Whiteboard Finance was that natural outlet. And now, fast forward 2 or 3 years later, it's kind of grown into its own business where I can do this full time as opposed to working full time and doing this on the side.
Yeah, that's incredible. And the background in finance, from my experience, um, the best way to learn is through channels like yours on YouTube. But how much do you feel that your degree and just your career in general was able to teach you, rather than just like doing it and getting started?
Yeah, so I think, and I apologize, I probably didn't answer the first part of your question. So I think that I am self-taught if you want to look at it from like a personal finance standpoint, but I'm self-taught just like how anyone, your age now can jump on YouTube and become self-taught. So I'm not trying to discredit that at all. But what I think is that having the background in finance is being able to take these ideas that some people may be teaching on YouTube and actually relate them to real life experiences, if that makes sense. So kind of that's like the experience is the glue that brings the ideas together, if that makes sense.
Yeah. And then you said 2017 was the when you started YouTube.
Yeah, November of 17 was my first video. I had a couple of videos that did pretty well. And then I took a break. I had some, personal issues, couple deaths in the family, things like that, to where I took maybe like a, I don't know, 5 or 6 month hiatus. And then I came back in October of 18 and just hit it super hard. And I haven't stopped since. So The channel really blew up in April of 19. I had a car dealership video go viral. That video has about 7 or 8 million views at this point.
Wow.
And basically, the rest is history. So I'm just still making content, still trying to help people. The thing is, though, with my channel, it's kind of a mix of everything because I am a student of finance, not just, one specific thing. And I do have experience, as you mentioned earlier in the intro, in, stocks and real estate, Bitcoin, cryptocurrencies, all that stuff. So I try and teach a little bit about everything. But what that's resulted in is kind of like a mixed audience. It's like you have people coming for like car dealership videos and learning about like Bitcoin. They're like, what the hell is this? So it's definitely a mixed bag, but I don't care. The channel is more for myself and trying to help people more than anything.
Yeah, and for me, that perspective is the one that I am looking for. Is with all the different diversification, with the real estate and the stock market, it's a good mix of everything. So, right now, you consider yourself primarily working on YouTube, or are you just as involved with stocks and real estate and your other investments as well?
Yeah, that's a good question. So the main source of income is definitely YouTube, just because the reach is really big and there's a lot of opportunity. As I'm sure you'll find out, once you become successful, I think you're able to branch out into other streams of income that just that simply make a higher ROI, not only on your investment, like your cash, aka cash on cash return, but also your time, if that makes sense. And for me, my most valuable assets are my time and my health. It's not money or wealth or anything like that, even though that's what I teach. If you don't have time or health, you're broke, in my opinion. Show me a guy that's on his deathbed, he'll give up every single penny he has to become healthy again. So my point is that I am still involved in real estate. I'm still involved in stocks. It's literally what I do. It's my interest, it's my passion. However, my highest ROI is definitely the YouTube channel.
Hmm. That's awesome. Yeah, YouTube is just a lot of people probably don't understand the powerhouse that YouTube is. There's some serious business opportunities within YouTube.
Yeah,
So,
definitely. I would say podcasting has a bigger reach potentially. There's less competition. I think there's only 1 million podcasts out there.
mm,
On YouTube, there's millions, tens of millions of YouTube channels. And the reach, if you get discovered by the algorithm and get big enough, it's definitely a great way to connect with an audience. But podcasting is just as good. I think just being a creator in this day and age in 2020 and beyond is I don't want to say it's easy, but it's the easiest way to get discovered and become a subject matter expert in something.
yeah, it's seems like it's the easiest it's ever been from like the more recent years of as far as just networking and that sort of thing.
For sure. If you have
Um,
a cell phone, you can start a channel.
yeah, yeah. So kind of getting into the nitty gritty a little bit with as far as investing. If you're getting started out, do you think real estate is a smart investment for everybody, or should you go to the stock market first? How do you go about becoming an investor or increasing your portfolio?
Yeah, in my opinion, the fastest way to build wealth in the United States is through real estate. If I could take a time machine and say I was just graduating at 21 years old again, say this was 12 years ago, I would house hack. If your audience isn't familiar with that, I'm sure you are, but basically it's buying a multi-unit dwelling. So whether it's a duplex, triplex, fourplex, maybe even five or more if you want to go commercial. But what I would do is I would find something that's 2 to 4 units, live in one side, rent out the other.
Mm. Yeah, that's a increasingly growing theme, or not necessarily a theme, but I hear a lot of people talking about that as far as just ways to get your foot in the door, because you can essentially live for free with that method. Um, the problem for me with that is I get a little anxious about that debt, taking on a little bit of leverage. I'm not
Yeah,
quite as
I
I
hear
mean
you.
I got student loans and things like that, but um,
Yeah, I was saying well, so perfect example. Here's my one buddy. When we all graduated, he graduated from Ohio State. I was graduating from Akron, and basically he bought a really, really nice condo or townhome, however you want to classify it, in a really up and coming area in Cleveland. Very trendy, very becoming gentrified, things like that. And ultimately, he had like two or three other buddies living with him. So it wasn't even like a duplex, for example. It was just his primary residence, which he got really good financing on because it was his primary residence. low interest rate, all that good stuff. And he basically charged his roommates, a monthly fee. But the way the townhome was divided was you basically had a first floor, second floor, third floor, that kind of a thing. So it was basically like a triplex almost in its own sense. And, he's done very well with that. I think the property's appreciated, probably 30-40% since he bought it, maybe more. And I know that he was basically living for free because of the cash flow. So I know debt can be scary to your point. But as long as you're covering your nut or coming close to covering your nut with the cash flow from the tenants or the roommates,
Mm.
it's actually not that big of a risk as long as you know that they're good for it if they can pay.
Yeah. Would you have any advice on finding uh, a the correct home to do that with? Is there certain things you look for as far as determining if it's going to cash flow or if the market is appropriate for it?
Yeah, that's a good question. So I would just do a basic preliminary search. Is write down all your numbers. What's your principal, interest? All that stuff, PITI basically, taxes, insurance. So basically, I would figure out all your numbers, estimate your maintenance. Typically, it's going to be 40% of the rent or whatever it is. And then you go on either Craigslist or Facebook Marketplace or Zillow or wherever these places are being advertised and rented. And you just do some market research. You find out apples to apples. Okay, I have a 3 bedroom, 2 bath, 2 car garage attached. What are these things renting for in this area? And then you just run the numbers to see if it makes sense. It's all about cash on cash return. You want to make somewhere in the low teens if possible. I can do that because I'm in the Midwest. I'm in Cleveland. You probably can't do that in San Francisco, for example, but it all just depends on your market. Some markets, they don't make sense to be a landlord. Other markets, it makes all the sense in the world. Some markets, it makes sense to flip houses. But to answer your question, I would just go through every single scenario, principal, interest, taxes, insurance, maintenance, all that stuff, any HOA fees. And then you basically just reverse engineer it to see if it cash flows.
Okay. Yeah. Awesome. Thanks. And to kind of piggyback off of real estate, I know you've talked about the Burr strategy before. Can you kind of give a quick outline of what that is and how someone can, do that tomorrow?
Yeah, so that's Burr is basically buy, rent, rehab, repeat kind of a thing. That was coined, I think, by Brandon Turner from Bigger Pockets. Shout out to Brandon. He's a really good guy. He's really smart. Basically, that's like acquiring a property, for example. You say you acquire a $100,000 property for 50 grand. You put 20 grand into it, rehabbing it, getting it up to par. The property's worth 100, but you have 70 into it. You would then try and pull out as much money as you can to refinance, meaning you're recuperating your initial investment of, let's say, $70,000 if possible. That would be 70% loan to value. 70 grand divided by 100 grand is 70%.
Mm.
And then basically, you would then repeat that process. So you take back your seed money. You now have a cash flowing property because you have a renter in there. And then you have your original investment back. So you find another property that's worth 100, buy it for 50, put in 20, that kind of a thing. I'm just using those numbers for sake of conversation, but you get the picture. It's just basically recuperating your seed money through refinances, which are tax free. And then you just kind of restart that process. It's like planting little seeds in a garden.
Hmm. And as far as if you were to keep doing that, is there uh, at some point you probably need to hire like property managers, or do you recommend just kind of infinitely expanding that? How would you
You
go
could,
about? Yeah.
you could. I mean, it just depends on how you want to run your business. I mean, if you have enough overhead or enough cash flow, then maybe bringing on a property manager makes sense. Some typically charge, 8 to 15% of the rents. There's other stipulations too, but just in general, that's usually what the fee is. But also, you have to realize like you can't do that infinitely if these properties are just in your name. Meaning, like you can only have, I think the regulation is like 10 single family home mortgages in your name. Then you would
Okay.
have to give it to your wife and then your cousin and all that stuff. But that's a stupid way of doing business. But basically, my point is you can be limited, and it all depends on your debt to income ratio. Some banks may simply not want to lend to you anymore at that point, where then you have to get creative and go to potentially private money or friends, family, fools kind of a thing. It's basically whoever's going to give you money and you pay them back on whatever terms you agree to.
Yeah. Okay. That makes a lot of sense. How much of, if you were to have an overall portfolio, um, how would you diversify it with real estate compared to stocks, compared to, whatever other asset you want? as far how do you divvy that up?
Yeah, that basically just boils down to asset allocation. So the easiest way for people to think about this, they get intimidated with this stuff, but it's really super simple. If you just look at your net worth is your ultimate measuring stick of how you are financially, your financial health. So if you picture your net worth as a pie, meaning all your assets minus all your liabilities, then you would categorize all your assets and you would divide it by whatever your net worth is after you subtract your liabilities. So, very simple example, um, you take all the stocks that you own or equities. That could be a 401k, that could be a Robinhood account, that could be Vanguard, it could be whatever. So, any amount of stocks that you own, whatever that value is at that given moment, any amount of real estate you own, whatever that value is, crypto, precious metals, bonds, commodities, et cetera, et cetera. And then you just take those numbers and figure out what percentage of your net worth those numbers are. So the numbers that I like to shoot for is basically 30% real estate, 30% stocks, 20% cash, and I'll explain why in a minute. And then basically 10% gold, 10% Bitcoin. That's me personally. That may not apply to you, but I think that's a sleep well at night portfolio.
Yeah, so the because I want to get into a couple of those things that I'm not as educated on as far as especially the Bitcoin, but you mentioned having 20% in cash, and is that in your mind some sort of an emergency fund or just liquid cash that you can spend on an investment, or how would you go about like prescribing that 20%?
Yeah, that's a great question, and that's what I was going to expand on. So right now in 2020, I'm sure you understand this, especially if you watch my videos. Cash is trash. The Federal Reserve has basically perverted the financial system by making interest rates 0%, meaning that people are forced to invest their money whether they want to or not. So whether you're 20 years old, ready to invest, and you've done a million hours of research, or if you're a 60-year-old lady in the middle of the Midwest who has no idea what investments even are, your purchasing power is being eroded by having no interest in an inflationary monetary system, meaning that if you're earning 1% in the bank, which no one is, they're earning maximum 0.5% right now at the time of this recording, and inflation, the prices of things going up, is 2, 3, 4%. That means you're losing that difference in purchasing power every year. So $1 is effectively becoming 97 cents, if that makes sense.
Yeah.
So people are forced to invest their money in things whether they want to or not, and that's the whole reason why I started my channel. So to answer your question, the reason I recommend having 20% in cash, even though it doesn't make sense to have that sitting in a bank account, is that that should cover not only your emergency fund, but it's also an opportunity fund. So say, for example, we go through another March where everything dropped 30, 40, 50%, right? Well, if you had cash sitting on the sidelines in your AKA war chest or your quote unquote war chest, that was a buying opportunity. I made good return on that because I had cash on the sidelines. If this was 2011, 2012, after the 2008 market crash or housing market crash, I know people that were picking up single family homes for 30, 40, $50,000 that are now worth $100,000 today, and they're renting for 12, 1,300 bucks a month. So that's a buying opportunity. So if you didn't have cash on the sidelines at that point, you didn't have that opportunity fund, if that makes sense.
Mm-hmm. Yeah, and especially in the year of 2020, it seems like a year that people are reflecting on their personal finance, or it's kind of a wake up call because they're either losing their job or they're not having enough savings to kind of hold them over if they need it. Do you think that that's the most critical thing someone can be prepared by, is having that sideline cash, or are there other aspects as well that you would recommend?
Yeah, I think that having that cash on the sidelines, you don't want too much. You don't want, 50, 60, 70% of your money in cash, because then you're literally losing 2 to 3% or whatever the rate of inflation is based on the consumer price index. There's other metrics than the CPI, but you are then losing, 2, 3, 4% every year on that 50, 60, 70% of your wealth. Does that make
Mhm.
sense?
Yeah.
So you don't want too much. However, I think you need to find a balance between having that emergency fund, which I'm glad you brought up, because I don't even recommend investing at all until you have an emergency fund, because you have to realize when crap hits the fan, and you do lose your job, you need to be taken care of at least for 3 to 6 months, depending on your line of work. So the way that I define an emergency fund is basically, if you're just a young single guy, maybe such as yourself, no kids, no wife, or no dependents, 3 months is fine. You'll be able to find a job, you'll survive, right?
Mm.
If you have a fiance or a serious girlfriend or a serious partner, then maybe 4 to 5 months is better. And then when you actually have dependents, people that rely on you putting food in their stomach, is my definition of a dependent, then 6 months makes sense. And then also, if you're an entrepreneur or in sales where your income is all over the place and it's very unpredictable, then even maybe 8 to 12 months would make more sense as an emergency fund. That way, you're still good for at least 3 to 12 months, depending on where you kind of land on that spectrum.
Awesome. Yeah, thanks for that. That's a good system to use. For me, I'm on the lower end of that scale. I don't need.
Good, dude. Stay single for a while.
Well, I'm not single, but I'm only taking care of myself right now.
Good, good,
I think
good.
my
Yeah, that's what
emergency.
I meant. Wink, wink. No, I'm just kidding. I'm kidding.
I got an emergency fund. There's saltine crackers in my cabinet. That's
And
what's holding
ramen,
me over.
ramen soup, ramen noodles.
Yeah. Um, so as far as uh, what we were kind of getting into, or you mentioned, you're also invested in gold and Bitcoin. Why do you think that's important for somebody? And I'm asking because I really don't know.
Yeah, so good question. So when you look at asset classes, real estate is typically tied to financial markets. I mean, it obviously is. Stocks are obviously tied to financial markets. Bonds are tied to financial markets. When you look at a chaos hedge, or a crap hits the fan hedge, that is typically stores of value outside of the financial system. Uh, Meaning that gold has typically been a store of value or a form of money for the past 5,000 years, and that gives it value. Basically, money is only what two people agree upon as a means of transaction. So, like, if you have a car that I want to buy and you like Bitcoin, I'll say, hey, let me pay you in Bitcoin. You cool with that? Sure. We just did a transaction. If you have a car that you want to sell, and I have, a bucket of grapes, and you really like grapes, maybe you'll sell me that car for grapes. I don't know. In that point, grapes are money. It's just a form of transaction, or means to a transaction. So when I talk about gold and Bitcoin, that is based on my asset allocation: 10% gold, 10% Bitcoin. That is 1/5 of your portfolio getting away from the financial system, if that makes sense. So if things really were to get crazy, such as Venezuela, Zimbabwe, Yugoslavia in the early 90s, Soviet Union, Weimar Republic in Germany, people were literally taking wheelbarrows of cash to the store just to buy bread and milk, that kind of a thing, meaning that their fiat currency, their money, their paper money, had no value because it wasn't backed by anything. So in 1971, the United States went off the gold standard, meaning that money, like the dollars in our wallets right now, used to be able to be redeemable in silver and gold. They went off that about 40 years ago, 50 years ago. And now we have what is called a fiat currency, meaning that the money in our wallet is literally just a piece of paper backed by nothing. It's backed by taxpayers, it's backed by faith in the government, it's backed by a couple other things which I won't go into this podcast, such as petrodollar and the military.
Mm.
But other than that, basically it has no value. So why I like Bitcoin and why I like gold is because they are hard forms of money, meaning that you have to mine gold, you have to mine Bitcoin, it's decentralized, you have to extract it and put effort and time and resources to be able to extract it and earn it, as opposed to soft money or easy money, which is the United States dollar. They just printed 3 trillion for stimulus out of thin air, with a click of a mouse button, meaning that that money was easy be brought into the monetary system. So when things like that happen, at some point, I'm not saying it will happen now or in 20 years, but at some point, bringing more money into the currency, or into circulation, excuse me, inflates that currency, making it worth less over time, if that makes sense.
Yeah. And that sounds startling when you're saying that in the click of a button, it's 3 trillion, and the inflation, if it's just increasing by 3% every year, is that sustainable? Where does that lead to in the
That's a
years
great
to come?
question. I'm not a That's above my pay grade, but
Okay.
basically, if you look at other countries that this has happened to, say for example Japan, they've gone through what we call stagflation, meaning that their interest rates have been zero, if not negative, for decades. And they basically have had, if you look at their stock index called the Nikkei, Nikkei, that is the equivalent to basically our S&P 500, if you want to make that kind of a comparison.
Mhm.
So if you look at a chart of the S&P 500, that's gone up historically over time by, let's call it, 7%, 8% annualized, maybe a little bit more in the past 10 years. But if you look at the Nikkei, since the early 90s, their market has been flat. So if you invested in the 90s and you fast forwarded 30 years investing in the Nikkei, you'd be basically at break even or right around there. So that's what we call stagflation. It's when there's slightly higher unemployment and higher inflation, which is just, it's bad because at that point your money is becoming worth less, but you don't have a means to earn any of it because there aren't jobs. And I'm not saying that's going to happen. I'm not trying to turn this into like a doom and gloom podcast. I'm just saying at some point you have to pay the piper. You can't just keep printing money. And at some point there's going to be a better form of either world reserve currency or a harder form of money, which is why, things like Bitcoin have literally just exploded to 22,000, 23,000 per Bitcoin, hitting an all-time high, this morning at the
Mm.
time of this recording. So there's reasons why that's happening, in my opinion.
Yeah, and then just to kind of hit home one of the points, so with inflation, you were saying the best way to overcome that is through investing in the real estate and in the stock market. At least for our time, anyways, that's the best way to counteract that.
Yeah, that's to counteract the erosion of purchasing power. So if you know that, here's a perfect example. Say, for example, you take out a loan, you want to get a 30-year mortgage, right? And your 30-year mortgage is 2%. That's your interest rate. It's a really low interest rate, really good interest rate. It's locked in, it's fixed, it's not adjustable rate mortgage. You know that if you can borrow that money at 2% to get into this asset, and you know that inflation is going to be 3, 4, 5, 10%, I don't know, you're locking in 2020 debt or present day debt at a lower rate than what the currency is inflating at, meaning that if the currency is inflating at that rate, you are able to pay down your 2% loan quicker. Or, if your income actually matches that inflation rate, then you're paying down a loan that's worth a smaller interest rate with higher inflated dollars,
Yeah,
tomorrow's dollars, if that makes sense.
yeah, that makes
So
a lot of sense.
yeah, to counteract, to basically to counteract that erosion of purchasing power, as you mentioned, you have to invest in things that are yielding you a higher return than the rate of inflation.
Mhm.
That's basically what it boils down to if you want to maintain your wealth and maintain your purchasing power.
Right.
So quick example of gold, basically, one gold piece was able to buy you a nice tunic in ancient Rome. One gold piece today, let's call it 1,800 bucks, 1,900 bucks, is able to buy you a nice suit in 2020, meaning that that purchasing power hasn't changed in hundreds of years, if that makes sense.
Yeah, makes a lot of sense. And kind of going to Bitcoin, or this idea of just a means of transaction, do you see Bitcoin having a future of being involved with, the average person's day to day transaction? Is that where Bitcoin's going? And if so, why is it Bitcoin instead of like gold, like you mentioned, or another type of cryptocurrency?
Yeah, that's a great question. So I think Bitcoin was never meant to become, well, if you read Satoshi Nakamoto, that's the pseudonym for the person that designed or created the software behind Bitcoin or the protocol.
Hmm.
It was never designed. I mean, his white paper says it's meant to be internet money,
o-
basically.
Okay.
However, in its present day form, it's not really designed for you to go to Starbucks and buy a coffee with Bitcoin. Bitcoin, the way that it's used today and why it has such big network effect, meaning more and more people are using it, is because it is a digital store of value. So going back to that decentralized, trustless, no central bank, no Federal Reserve, no money printing. There's only 21 million Bitcoin ever going to be created in existence, meaning that there is a scarce supply and a finite supply. Bitcoin is disinflationary or deflationary as opposed to the US dollar, for example, which is an inflationary currency. It's going up by X percent every year because of inflation. Okay, it's designed that way.
Hmm.
So the appeal, it comes back to simple supply and demand. Okay, so if there's, it has to be has to be verified in the blockchain. It's all kept public on a public ledger. So if I know your wallet, you know my wallet, I can see whatever transactions have ever happened in those two wallets ever. So it's not like, the Federal Reserve just printed $3 trillion. Like, where the hell did that money go? Like, let's just say every man, woman, and child in America got $1,200. That stimulus check.
Yeah.
Um, there's still a lot of money that who knows where it went. It went to the commercial banks, but you can't verify that because it's fiat money. It's just made up. Now with
Huh.
Bitcoin, the appeal is that it's trustless, meaning that I don't have to trust you. You don't have to trust me. There's no third party arbitrage or arbiter, if you will. There's no PNC Bank, Key Bank, Wells Fargo, Chase, that kind of a thing to verify that transaction. It's just simply one wallet sending money to another, period. So the appeal of that is that since it's decentralized, there is no Federal Reserve that controls it. There is no European Central Bank. There is no Bank of Japan that dictates interest rates and things like that. So the appeal is that it's basically free money and it's decentralized, trustless money. If that makes sense at all.
No, yeah, it makes a lot of sense. So Bitcoin being kind of like this revolutionizing concept, or at least to me, anyways, it's newer and the one that I've more commonly hear about. How did Bitcoin become the chosen cryptocurrency? Because there's a lot of them, right, that have kind of started.
Yeah, there's hundreds, but you have to realize the value proposition of Bitcoin, the way it was designed. And I'm not doing it justice. There's so many more layers to Bitcoin that this is just a high level 101 explanation. But
Yeah.
basically, it was the first Bitcoin. It was the first cryptocurrency ever created, and it came right after the 2008 financial crisis. That's basically when it was put into existence, and when the first Bitcoins were mined. I believe was January of 2009. um, the appeal is going back to what I talked about because it's decentralized and it's trustless. So the way it's designed is that every 4 years there is a halving, meaning that there is a reward. So the way that all these transactions are verified between me and you, that gets put on the ledger. Computing power has to verify those transactions. Otherwise, it could just be made up, right?
Mm-hmm.
So that computing power is what we call miners. These are miners that are verifying all these transactions on the blockchain. So they can see that I sent you money, you sent me money, et cetera, and that's being verified day in and day out. So why do people mine Bitcoin? Because there's a reward. So every time you mine a block, you get rewarded. Well, that reward has been cut in half roughly every 4 years since its inception. So it used to be 50 Bitcoin, then it used to be 25, then it used to be 12 and a half, then 6 point whatever the math is, 6.25. And then every 4 years, you get rewarded less and less, meaning that it becomes more scarce, meaning it's not like fiat money that we talked about where I can just click a button and introduce 3 trillion more US dollar units into the system. Bitcoin only becomes harder to attain and more scarce as time goes on. And that's really the appeal of it because it is a sound, hard money as opposed to being an easy money.
Yeah, and it's not going to lose its value because of the being hard money.
Yeah, the
Um,
scarcity.
yeah. So how would you how do you invest in Bitcoin? Do you need a wallet? You get one of those and then you go to the Bitcoin store? Like, how does that work?
Yeah, you go down the street to the Bitcoin store.
Yeah.
No, so you don't less necessarily. I know what you're saying when you say wallet, but just
Yeah.
so the nomenclature is
Mm.
universal. Basically, for us retail investors, we're not Wall Street, we're not Guggenheim, we're not institutional investors. We're just regular people. We would go to an exchange, just like you would go to Robinhood, Vanguard, Charles Schwab, TD Ameritrade, Fidelity, whatever. You'd go to a brokerage that you're able to acquire these shares of equities. It's just like buying stocks, right?
Hmm.
So you'd go to an exchange. You have Coinbase, you have Kraken, there's a million. I'm not even going to go into it, but basically you'd go to an exchange just like you're buying a stock, and you're able to transfer either US dollars from a bank or a credit card or a debit card or whatever you want to transfer it from. And then you're able to buy
Whoops.
Bitcoin or any other cryptocurrency from these exchanges. So at that point, your money is sitting on a virtual wallet on the exchange. So pretend like your stocks are sitting on Robinhood, for example. However, with crypto, you have keys. The keys are the keys to your Bitcoin. It's an encryption. It's extremely reliable and solid. However, if your Bitcoin is sitting on an exchange, pretend like that's your money sitting in a bank. And if that bank gets robbed, you lose your Bitcoin, that kind of a thing. So whether the CEO of the exchange is, a bad actor and he wants to move to the Cayman Islands and take everyone's Bitcoin, that can happen. If they get hacked by, some random hackers, that can happen too. So the next layer of security is taking your Bitcoin off the exchange and putting it onto cold storage or a hardware wallet. So I personally use the Ledger Nano S. It's basically just a encrypted wallet to where I can go into Coinbase. I know what my ledger's address is, just like I talked about. Me and you have these addresses. I get the coins off the exchange, put that into my hardware wallet, and that is encrypted with a 24-word passcode or passphrase. So, in order to get access to that ledger, it's not the physical ledger. It's not the physical, if you want to look at it as like a USB stick. That is not where your Bitcoins are stored. Your Bitcoins are encrypted, okay? Meaning that if you put in those 24 words in the right order, you now have access to that wallet's coins, if that makes sense.
Yeah.
So if you can memorize 24 words in order, that's your entire bank account in your brain. I can't do that, so because I'm getting old. So I put it on a couple of secure places, but um, that's basically it, dude. It sounds super complicated, but once you understand it, it just makes complete sense. You are your own bank at that point.
Yeah. I mean, as far as I mean, I forget my passwords all the time. That sounds like one you definitely don't want to lose.
Yeah, there's
um,
there's a bunch of different ways of storing it smartly. Like you can take 12, put it at one location, take 12 words, put it at the other. That way you have your 24. You can put it on a piece of titanium. So you can take like a jeweler's block and literally pound it into the titanium so you know exactly what the words are. It can't be burned in a fire or flooded in a flood, that kind of a thing. But there's a million ways to do it, but it's kind of fun. It makes you feel like you truly have ownership of your money and your wealth. But again, Bitcoin, I want it to be 10% of my net worth. It's only about, I'd say like 6 at this point, but I buy every week. I've been buying every week for a year now.
yeah, that's so cool. So would you consider that a fairly low risk investment?
Oh, absolutely not. No,
Okay.
Bitcoin is super high risk. And I'd say for the people listening to your podcast, depending on their age, if they're, younger, single, why not? Put, 20, 30% of your net worth in Bitcoin as long as you're okay to lose that.
Yeah.
You have to realize that we're still in the infancy of Bitcoin. Bitcoin right now is email in 1996. Okay. It's like news segments of, oh, Marco sent a digital letter, like we're in 1996 with Bitcoin right now, dude. I still get
Okay.
a ton of shit from my audience. Like, why are you shilling Bitcoin? Oh, blah, 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 blah. They simply just don't understand how the plumbing of the financial system even works, and then B, they just don't understand Bitcoin's value proposition, which is fine. I mean, I could be dead wrong about this, but I don't think I am, because a lot
But
of
yeah,
institutional money is moving into the space.
yeah, and it's not gonna be the end of you if it doesn't work out. You said it's 10%, so you know,
That's why I allocate that amount, is because I'm 33, I'm
awesome.
all that kind of stuff. It's like I'm more worried about, my family and preserving wealth. If I was like 21 and single and, making money, like whether I was just freshly graduated and making, big boy money, or got my first big boy job, I'd have I mean, I'm just talking smack right now, but I'd have like 30, 40% of my net worth in Bitcoin, just because I feel that strongly about it, because I've been studying it for about a year. But again, your position size, this is a good nugget for your audience. If your position size makes you uncomfortable, you have too much in that position. Okay. So if you're 99.9% in stocks, and you're uncomfortable, lower that to however much you can sleep at night. Okay. I call that the sleep factor. Okay. If you can't fall asleep because of your position size is too big. Um, if you don't have Bitcoin in your portfolio, I genuinely think you're doing yourself a disservice at this point in 2020. But, that's just my opinion. But you shouldn't have more than you're uncomfortable with, if that makes sense.
Yeah, no, that makes a lot of sense. Yeah, even in this last however long it's been, you were started explaining Bitcoin. I'm just like soaking it all in. That's some good tangible information. So thanks for that.
Sure.
Um, kind of switching gears a little bit. I kind of want to talk about your YouTube channel because I mean, my podcast is on YouTube. Eventually, I'm gonna try to get it on the other platforms. But as
Hmm.
far as the growth of your channel and um, when you took it seriously as like, okay, this is actually something I can see returns from. How was that process? And did you go into it knowing I'm gonna have 460,000 subscribers?
No, I don't think anyone does because those numbers just don't seem attainable. I started out just like you, bro, just like anyone else, you know, zero followers. Again, I didn't touch on this too much, but in the beginning of the interview, you know, I went to Akron and got my finance degree because I wanted to be a financial advisor. And my career, I graduated in December of 2010. This was after the '08 recession, and nobody was hiring. Like, I ended up selling cars as my first job after college. I could have done that without a high school diploma. So my point is that um, I never scratched that itch of helping people, you know, learn and manage about their wealth. You know, I worked in finance. Don't get me wrong. I worked with, you know, people that are worth hundreds of millions of dollars in commercial real estate, but I never scratched that like one-on-one itch of being that teacher, that advisor. So that's the whole reason why I started YouTube. So just a couple of tips for your audience if anyone's interested in starting. Never start a channel for the money or because oh, finance channels make a lot of money. They have a high CPM. They have a lot of advertisers. Like that's the 110% wrong reason to get into it. Get into something that you're passionate about. If you're passionate about, you know, gardening, start a gardening channel. If you're passionate about, you know, making coffee, start a coffee channel. The reason I say that is because if you start a channel for the money or the prestige or whatever, which I couldn't care less about, to be quite honest, you're doing it for the wrong reasons. You're doing it because you're not doing it out of the goodness of your heart. You're doing it because you want to make money, which is fine. Making money is a byproduct of providing value, but you're never going to get through that hump of how come my videos get no views? The algorithm hates me. Look at these comments. You know, everyone's making fun of me, that kind of a thing. You're never going to get past that if you're not creating your channel for the right reasons.
Yeah, I 100% agree. uh, Me starting my YouTube channel, I'm not saying that I don't think it would be cool if eventually it would make money or have some sort of return, but I always tell
Sure.
people uh, the reason I started it is because like I get to talk to you right now for an hour about all these topics I know nothing about, and I'm learning all this. And originally, when I started, it was just going and knocking on mansion house doors and asking people if they would do an interview, like just
That's
hoping I could
awesome,
talk to
dude.
a millionaire. Like I was, hey, I have a YouTube channel or I have a podcast. Can I sit down and ask you questions about making money? Usually I would get a no or leave me alone, but uh, I mean, it worked. I have a few interviews of just
That,
people
that's
willing to
awesome,
talk.
dude. That's freaking awesome, man. Like honestly, you remind me of me, man, because I started out in sales. I've been in sales for a majority of my career. And just having that's the other reason why people don't know this, but I started a second channel called Whiteboard Finance Show. I just haven't posted to it yet. But to your point, that is literally the reason why I started it because I look up to a lot of people like Anthony Pompliano, the Pomp Podcast. There's a bunch of podcasts out there, but like Joe Rogan, for example, he gets to interview anybody in the world based on how big his podcast has gotten.
Mm-hmm.
And imagine how cool that is. Instead of like being the sales guy on LinkedIn, like praying someone's going to take a meeting with you or, you know, knocking on doors or that kind of a thing, which is awesome. You know, you have so much more leverage when you build out a platform and become a subject matter expert. You know, it's like I'm talking to some of the brightest minds in finance through DMs, whether it's through Instagram or Twitter, and it's like I never would have been in that position if I just would have been the guy at, you know, KeyBank or Marcus and Millchap, analyzing loans and shit behind a desk. You know what I mean? Part of my French is just true. So I think that you're doing it for the right reasons, man. That's awesome.
Yeah, I appreciate it. And yeah, I agree. That's the such a cool thing to be able to just have that networking opportunity. Um,
For
I mean,
sure.
just to give a quick example, I'm a pilot. That's kind of my career path right now, but I really enjoy learning about finance and things like that. But one of the houses I knocked on, he was a fighter pilot, but he used to be for 20 years. And then now he works for FedEx. And that's like something I would want to do one day. So now I know someone who does that job, and I would have never had the opportunity to talk to him if I didn't just have this excuse of having a podcast. So, um,
Absolutely. Absolutely. Yeah, you'll see, dude, your network is your net worth. Like it really is because like perfect example, I'm not saying this is my situation, but I'm saying pretend like you're some kid growing up like in a small town. All you know is your small group of friends, which is fine. Like friends and family is super important. That's one of the biggest sources of wealth, you know, in my opinion. But Anyway, say you're, growing up in a cornfield and all your friends do is, do drugs and, drink and smoke and, do some stuff that they shouldn't be doing, right? Well, you're typically the average of the five people you hang out with the most. That really is a fact. And when you start getting into these other echelons or these other circles, you start to realize, like, you start thinking differently and not changing as a person. Like, I'm not talking about that. I'm not saying never change who you are, but you start looking at different opportunities differently, and more opportunities start coming your way simply as a result of the people that you hang out with.
Yeah, I 100% agree. Um, Kind of staying on this same vein of uh, kind of getting to that next level. Is there a book that you would recommend to someone to read that's going to help them?
Yeah, there's a couple. So touching on, if you want to go like stocks, real estate, crypto kind of a thing. In crypto, if you want to learn about Bitcoin specifically, I highly recommend the Bitcoin Standard. It'll help you. It was written by Dr. Saifedean Ammous, Lebanese guy. Super, super smart. If you want to learn about what money is and what hard money is, what easy money is, and how Bitcoin plays into that, the Bitcoin Standard is a great book. I highly recommend that. If you want to look at like stocks and investing, if you want to go the more traditional route of value investing, The Intelligent Investor is always a classic that used to be the Bible until, rampant money printing and low interest rates, basically just made every stock go up. You don't even have to, know any metrics or valuations to be able to make money. But The Intelligent Investor and the Boglehead's Guide to Investing. Boglehead is Bogle head. Boglehead's Guide to Investing. And then in real estate, a lot of stuff by Bigger Pockets is really good. There's stuff by the gentleman who started Keller Williams. His first name is escaping me, but his two books are really good. You'll just have to Google like Keller Williams author, and it'll come up. It's really good.
Awesome. Thank you. Um, to kind of spitfire some of these questions, uh, what would you say if you were to pick out one characteristic or maybe a few, like, but what do you think is the most important trait that somebody can have to making it financially or in general entrepreneurship becoming successful?
Discipline and consistency.
Mm.
I know in 2020 you're not allowed to say that because everyone's equal. Discipline and consistency, dude. If you want to lose weight, eat less calories or burn more calories than you consume. That kind of a thing. If you want to get six-pack abs, stop eating pizza and drinking beer. It's very simple. And I'm guilty of that. Don't get me wrong. I got dad bod #1 right now. Actually, no, I'm in pretty decent shape. I'm busting out some pull-ups, but
Nice.
discipline and consistency for sure. I feel like that's lacking just because society's become a big easy button in my opinion. Everything's instant gratification. I want my delivery now. I want this delivered by drone. I want my food delivered. I want this. I want that. At some point, you just have to realize that it boils down to you. So if you have discipline to work on your craft, that ultimately evolves into consistency, and consistency is where you see the big differentiator in results, doing
Hmm.
things over a long period of time.
That's awesome. Yeah, you've definitely shown that with the progression of your YouTube and your business. So, um, it works. In other words,
Yeah.
um, how would you define wealth? Because I mean, the channel is called the Get Wealth Podcast, but I always like to ask the guest how they define it.
Yeah, I love that the title of your podcast, because my catchphrase since day one has basically been, "Hey everybody, welcome back to Whiteboard Finance. My name is Marko, where I help you master your money and build your wealth." So a lot of people don't think of wealth. They think of like, "Oh, this guy makes 300 grand a year. Oh, he makes $1 million a year." Like, your income is not your wealth. Well, to answer your question, how I define wealth, there's wealth that you can measure, and there's wealth that is more like intangible. So, in my opinion, the biggest sources of wealth and happiness and joy are living a life kind of on your terms. So, having your time is wealth, in my opinion. Health is wealth, in my opinion. Having a strong family unit, if that's the route that you want to go. I'm not saying you have to. I'm just saying for me personally, raising a family, being involved with your community, whether it's a church or, mosque or whatever, temple, I don't know. To me, that's that intangible wealth. And giving it away, giving, whether it's money away, giving your time away, volunteering, that is a wealthy life, in my opinion. Now, the other side of it, because I have a channel about finance, in case you haven't noticed, is measuring your monetary wealth or your tangible wealth. So when people talk about like assets, you have to look at basically everything you own that has value, simply minus your liabilities, the things that you owe. Okay, what you own minus what you owe, and that is your monetary wealth. So if you measure things just like you're measuring a diet or a workout plan or a business plan, things are going to get managed properly. So if you manage your wealth, I would put it into a spreadsheet of all the things that you own from your checking account, savings account, 401k, whatever. Categorize it into those things that I talked about: cash, stocks, bonds, commodities, precious metals, Bitcoin, whatever. And then you figure out, what your pie is, and then you can adjust accordingly. So intangible wealth and monetary wealth is kind of how I define that and measure that.
Yeah, that's a great way. I agree, and it seems like as people grow their wealth more, from I mean, I haven't, but from what I hear from people like you, is the shift on kind of how that changes. Yeah, I notice a lot more of it. Yeah, money's great, but there's a lot of other things as well as far as having a complete picture of wealth.
For
Um,
sure.
so yeah, I definitely agree. I do want to look at the questions real quick. I think we covered actually a lot of what people were asking, but I want to double check. I don't want to take too much of your time here, but
No, you're fine, man. I feel like my my answers are always long-winded. I got to get a little bit better about being more concise, but
another
whatever.
detail. That's perfect. Um, okay, here's a good one. So Cole Grindy, I know he watches your channel as well. He's done pretty well in the stock market. I interviewed him a couple weeks ago, but he
Nice.
asks, um, what aren't you invested in? So like what are some things that you would not invest in?
Specifically stocks or just in general?
It was open ended, so whatever you think.
Okay, so two things. So if you want a specific stock, I completely missed the boat on Tesla. And to be honest, I know I'm gonna get hate for this. I mean, I still just don't see it because I'm old school. I'm like intelligent investor, analysis, old school, like traditional finance degree. I mean, maybe I'm just, ignorant, but I missed the boat on Tesla, so I'm not invested in that. That's not to say I won't be or I don't like it. I'm not.
Mm,
Uh, Secondly is bonds. At my age, I'm 33. I don't want bonds in my portfolio unless it's in my target date fund and my Roth IRA. Bonds have been destroyed by, what we've seen with monetary policy, and a lot of debt or a lot of bonds are actually negative yielding at this point. So that is something that I just don't want in my portfolio right now.
awesome. Yeah, it's a good answer. Um, Next question is, how do you think networking affects your net worth?
We talked about this earlier. I think it's the one of the biggest tracks or one of the fastest tracks to accelerating your net worth, because you just simply are presented opportunities depending on your circle or depending on your network that you wouldn't have otherwise, whether it's getting your foot in the door in a big company or whether it's being pitched a certain real estate deal or a certain startup venture capital deal. It just depends on who you hang out with and who your circle is. So yeah, I'm a big believer in networking with the right people.
Yeah, 100%. That's awesome, man. Well, kind of wrapping things up here. Do you have any recommendations of people that you think would be good to interview kind of in your circle, or any ideas that you could pitch me of try to who to reach out to?
Yeah, I think interesting stories are definitely my friends, Ryan Scribner, Nate O'Brien, Brian Young. They all have their different areas of expertise, and they're also younger. You have to realize these guys, they're still my friends, but I'm, older than them. However, when I was their age, I was freshly graduating. I was kind of working your typical corporate 9 to 5, that kind of a thing. Um, but the way that they've treated their business and the way that their minds work is that they're super forward thinking. The content they create is really good, so I would recommend reaching out to Ryan, Nate, Brian. They're really smart young guys.
Awesome. I definitely will. And I guess to kind of close things out there, out here, where can people find you? Your YouTube channel, if you have a website, Instagram, where can they go to find Whiteboard Finance?
Yeah, thank you. So my website is whiteboardfinance.com. YouTube channel is Marko Whiteboard Finance. You can just type in Whiteboard Finance, it'll come up. Twitter is whiteboardfin, Fin. Instagram is Whiteboard Finance. And then, feel free to reach out to me via, contact form on the website. Just real quick, I know this is a plug, but it's something that I'm super passionate about and working on for the last couple months.
Mhm.
I will be starting a school called Whiteboard Finance University. This basically takes you from being financially illiterate or not really understanding, money in general, to basically helping you grow your wealth to finance 401, to where you kind of graduate as a senior from college. It's not literally a school, but it's going to be made up of courses. And then basically there's going to be a community and then live streams with access to me every week. So I appreciate you letting me shout that out. I hope that wasn't too self-serving, but
No.
I'm really passionate about this project.
Yeah, that's awesome. Everyone, go subscribe to that. Go buy it, learn from it, become wealthy. I 100% endorse that. And listen, man, I really appreciate you taking the time to support my little podcast here. And yeah, it means a lot.
My pleasure, man. Hopefully next time we talk, it'll be a big podcast. So yeah,
Yes, sir.
just keep being consistent and doing the right thing.
I will. All right, everybody, get wealthy.
Thank you.
Yep.